Good afternoon. This is Hyunjin Kim of the International Affairs Department, and I'm the MC for today's event. Now, let us begin the banking session of FSS Speaks 2021. As you are aware, this year's FSS Speaks will be broadcasted online due to the ongoing COVID-19. And we're going to keep all the quarantine and disease prevention measures in proceeding the event. Today, please be reminded that English interpretation will be provided on the English channel. And I'd also like to thank you all deeply for taking part in today's event. Before we begin today's event, we're going to listen to the keynote speech of Governor Seok-Hun Yoon of the FSS.
Good afternoon, ladies and gentlemen. It's a great pleasure to speak to you as we open FSS Speaks 2021. First of all, I'd like to extend my warm welcome to distinguished guest presenters and other participants joining us today. As you may notice, now is the second time we are hosting this event online, following last year's first ever Untitled FSS Speaks. Given the persisting difficulties posed by COVID-19, I believe continued communication between the FSS and foreign financial companies has become more meaningful than ever before. As more vaccines are deployed worldwide in recent days, both the OECD and the IMF are making upward revisions to the growth rates of the Korean economy along with the global economy. Certainly, this has boosted high hopes for economic normalization in Korea and worldwide. However, while we look forward to a better future, we must bear in mind that our end goal should not be to return to normal, but to recover into a greener, more inclusive, and more resilient economy. To this end, we need to pursue a wide range of policy goals, such as addressing inequality, setting new targets on issues like ESG, and discovering new growth engines. Among those overarching goals, tapping into emerging industries like digital and green sectors is gaining worldwide attention because they are believed to be the main drivers of economic growth going forward. Under the circumstances, I believe Korea stands at a critical juncture in her path towards the so-called Great Reallocation, which is to devote more resources to new growth engines. And finance, indeed, serves as the very heart of this change. This is because, as you may all agree, the fundamental role of finance is to effectively allocate resources among industries with high growth potential and thereby invigorate the real economy. Distinguished guests, ladies and gentlemen, while I do realize that such roles and responsibilities may be daunting, I ask all of you to play a key role and share insights among ourselves along the way. Once Korea keeps on innovating her industrial and economic structures, I'm sure she could soon play a leading role for the green economy by making use of her renowned position as a digital powerhouse. And in an economy where innovation sprouts and productivity blossoms, foreign financial companies will naturally enjoy plenty of opportunities in return. So, I want all of you to join Korea in this journey to a mutual growth. I look forward to a fruitful discussion today. Thank
Thank you for your attention. From now on, I'll briefly explain how today's event will be run. Today's event will last for about an hour and 10 minutes, starting with the presentation on the banking supervision and examination direction, followed by Q&A session in order to answer questions from the financial companies. We will take questions through written comments, and you can write comments even during the presentation, so we look forward to your active participation. And when you write comments, please identify your name and the name of your company and the position. Now, let us begin the presentation session. Please welcome Director General Junsu Lee of the Banking Supervision Department.
Good afternoon. I'm Lee Junsu, Director General of the Banking Supervision Department. Today, I'm seeing you through these YouTube and broadcasting channels, and it is a very meaningful opportunity to have at least the minimum communication with you. I believe that today can be an opportunity for you too to gather some information about our supervision and examination direction. So first, let me start with brief introduction on domestic banking industry, and then financial conditions and risk factors at home and abroad. This will be followed by overall supervision direction for the entire banking sector, and then for foreign bank branches, and Q&A will be followed. So let's first start with the overview of domestic banking industry. So first, the asset and net income. Despite pandemic prolonging, the domestic banks maintain a solid growth in soundness. As you can see the red marks in the graph, the total loan is growing. This means that our banking industry is helping financing the struggling industries for the pandemic crisis. As you can see, the short-term income is decreasing. However, the overall level is very sound, and you can find the right-hand side the number of employees and branches of banking industry. As you can see, the number of employees and branches are constantly decreasing. As you are well aware of, due to increasing non-face-to-face transactions, such as online banking and business efficiency effort of the industry, it can be a major factor behind this. Let's move on to the soundness of domestic banks. First, the capital adequacy. The BIS capital ratio marked 16.54% as of the end of 2020, significantly exceeding the regulatory requirement. The reason behind this will be the preparation for introduction of Basel III requirements. And we can say that the asset quality is very improving. This will be another factor behind. So the asset quality is the second graph. Despite the pandemic crisis, the asset quality is showing the best improvement, with the delinquency ratio decreasing and NPL ratio also decreasing. On the left bottom side, you can see the earnings graph. As I have explained before, the ROA and NIM is decreasing. Also, for last year, we had several measures to finance the economy, and due to the decreasing interest rates, these numbers are growing smaller. On the right bottom side, we can see the liquidity table regarding the LCR and loan deposit ratio. Last year, we were handling all the crises and we were playing all the measures to overcome the COVID crisis. And we took the easing measures for these requirements. So the LCR ratio is also decreasing, and a slight upward trend is shown in loan deposit ratio. The LCR requirement is 100%, but a little differentiated between various banks. So it stays between 80 to 100%. So let's move on to the foreign bank branches. Currently, 43 branches of 36 banks are operating in Korea. There was no recent movement inward or outward Korea, and the total asset has significantly risen. And by region, the assets of European and US banks are increasing significantly. I believe this is because that the liquidity demand is increasing among large companies, and these foreign banks are dealing with these demand. And with increasing volatility, last year we saw more transactions regarding derivatives. With the assets growing, the net income is also increasing. As I have explained a moment ago, the loans to major large companies are increasing the net income with bigger interest rate income. And incomes from derivatives transactions are also factoring in this increase. As you can see from these numbers, despite the pandemic crisis, the banks and foreign banks are facing the pandemic situation with soundness in their assets and their quality. And these banks are supporting to finance the real economy and industries. Secondly, let's move on to the financial conditions and risks at home and abroad. Let me start with three factors. Firstly, the financial environment and in macroeconomic scope, and about the economic players, and third, about the business environment, including the regulatory system. Due to this prolonged pandemic, countries around the world are holding their expansionary policies. And these government policies are factors to make this growth rate rebound recently. The growth rate for Korea shows around 3%, as several outlooks expect. However, still the pandemic situation is ongoing, and other risk factors such as prolonged US-China conflict and countries around the world, as the market is rebounding, some interest rate changes can be another reason or risk factors. Also, during handling the COVID situation last year, we saw that great deal of liquidity were concentrated on the stock market, and this accumulates constant risk factors in our economy. And in this process, the credit, the household debt, and debt from small companies owners are aggravated. For economic players, if you look at the business, there are varying differences. There are businesses that are deteriorated from this pandemic situation, but other companies are even growing in their income and performance because they are focusing on non-face-to-face or technology. Our concern stays at the fact that the liquidity injection for these companies are helping these companies survive. However, when these measures end, there can be a cliff effect and some impact in the economy. And also, we have other risk factors in the economy regarding real estate and other assets, which will aggravate the household debt problem. And polarization of the economy makes the vulnerable group suffer more. The third sector is business environment. As I have mentioned, some financial measures to support the COVID-19 crisis will phase out, so we have to take a closer look at any possible impact. And the digital transformation, which has been ongoing for a few years, but it is, of course, accelerating along with the spreading pandemic. So other players are holding a tighter grip rather than brick-and-mortar banks. In addition, the recent implementation of the Financial Consumer Protection Act can change the business environment. The financial institutions must comply with this newly implemented act. And this changing environment can play as a risk factors. So there are some major risk factors in these three pillars. First one to be the household debt. Recently, the rising trend of household debt is accelerating, which can cause bigger impact or bigger risk in the future. Second, the asset quality can deteriorate among the industries that are suffering from this pandemic crisis, and mom-and-pop stores hard to survive this crisis. And also, we can see some cliff effect from the supportive measures. Third, in terms of profitability, the low interest rate is constantly factoring in, and also it can change the economic environment bigger than expected. And fourth, there are non-financial risks as well. Besides the financial risks, as we are well aware of, non-financial risks can play a bigger role in our economy regarding some cybersecurity or climate change. As we can see that countries around the world are garnering attention to these issues. In Korea, some might say that so-called physical risks are not as big as expected. However, some risks surrounding the traditional, some companies using fossil fuels can play as a bigger risk in the future. Now let's move on to the supervision direction for 2021 for banking sector. The first goal is to respond to potential risks posed by prolonged COVID-19 situation. And responding to these risks in a timely and in a right manner is very important. Our key areas will be first, the household debt, and second, the corporate restructuring and business normalization, and third one, obviously, the financial soundness of banks. The banks should maintain its soundness in its financial soundness. And fourth, the recent changing environment in the regulatory system and other changes. And the fifth area, key area, will be tightened monitoring on unfair business practices and reinforced risk management capability. So first of all, the stable management of household debt. The household debt issue has been long with us, and the FSS is taking a close monitoring on this issue. Last year, we saw liquidity injection, and the management of household debt faced bigger risks regarding the real estate issues and other factors. This year, despite these surrounding difficulties and environment, we have to stabilize the household debt management. And we have a goal to control the household debt growth rate, which rose in the process of overcoming COVID-19 last year, to the level before pandemic. And in order to reinforce we are strengthening risk management of the business loans for banking industry. And among these self-employed, some industries dealing with food delivery and accommodations are facing bigger risks than other industries. And for vulnerable groups, in order for them to survive this pandemic situation and to deal with possible risks. It is very important to supply them with pre-workout programs and other schemes.
Second is to promote corporate restructuring. Reflecting the situations post-COVID-19, it would be necessary for domestic businesses to gain soundness back again. Once when they have the financial soundness in operating their businesses, they will be able to gain trust again. So in order to do this, we have to evaluate the businesses in a prompt and a more effective manner. To this end, we are utilizing the bank's capabilities to improve all these systems. Second, we have to identify financially distressed companies effectively so that the resources can be allocated more systematically. And in the end, we're going to promote restructuring of the businesses. And in this process, capital markets or other factors should be fully utilized so that we can support their restructuring more smoothly. Third, we're also going to promote fast-track support program so that we can inject liquidity to temporary financially distressed companies. Our third goal is to strengthen financial soundness of banks. As I said before, many businesses have been hit hard by COVID-19, and we have provided support for them. And we are planning to terminate the support sooner or later. And in order to induce a soft landing in terminating these financial supports, we have to support those businesses so that they are not going to suffer financially. So when supports like payment deferral or maturity extension are all terminated, we have to make sure that they do induce a soft landing. As well, in normalizing liquidity regulation on LCR and loan deposit ratio, we have to consider various factors such as disease prevention level. And I think it's important that we provide a grace period in phasing out these measures. And because those financial debt has been accumulated for businesses, we also have to tighten measurement of those accumulated risks. In particular, banks are affected most by businesses' distress. So it is important that banks manage their capital in an adequate manner and reserve their loan loss provisioning capacity. There's mounting volatility within the market up till now, but depending on the change in US interest rate, I think the market volatility can even expand further going forward. So in order to prevent market from collapsing and being affected by external volatility factors, we're going to tighten our supervision. If you look at the right side, you can see the list of financial support measures in response to the COVID-19 pandemic. Our fourth goal is to respond to changes in regulatory environment. With the implementation of Financial Consumer Protection Act, I believe that there can be some difficulties in the early stage of implementation. However, it is our role to prop up support so that this new act can be taking root successfully within the Korean market. So our goal is to protect our consumers and grow banks at the same time. And I think we are seeing some signs of stability on concerns that we have had so far. And during the grace period of the implementation of the Financial Consumer Protection Act, we are going to refrain from taking punitive measures and provide consultations instead. And another important issue is about the discontinuation of LIBOR. And the exact timing of which the LIBOR is going to be discontinued is under controversy. But it is sure that the LIBOR is going to be discontinued. So in preparation for this discontinuation, it is important that we manage all the indices that are related to LIBOR. In other words, we need to reduce the number of contracts that are based on LIBOR. And in case of the existing LIBOR-based contracts, we should come up with a callback option provisions if there is enough maturity, and we have to sign new contracts after the discontinuation of LIBOR. And we have actually asked banks to do self-assessment on the discontinuation of LIBOR so that they can prepare for the post-LIBOR system. And after they assess themselves, and if they figure out some weak point, we're going to support them overcome these difficulties. And there's another issue related to the Financial Benchmark Act. This is also related to the equivalent act of the global trend. LIBOR has a CD interest rate has been used as a global benchmark in the past. But in order to do that, we have to get approval from the EU equivalent test. To do this, we have newly implemented the Financial Benchmark Act and designated some key index as our repo rate. Our remaining task is to get approval from relevant associations such as the Financial Investment Association. And our ultimate goal is to get the equivalence test from the EU. And this slide is on other issues. As you're well aware, there are many unfair business practices related to funds. And we need to block and root out all those risk factors related to unfair business practices of fund sales, such as bancassurance, trust product, mobile mortgage, loan for purchasing stock in public offering. We need to make sure that unfair business practices do not happen in all these areas. And the fundamental goal of the FSS is to strengthen risk management of banks and holding companies. Fourth, I'm going to tell you on the supervision plan for foreign bank branches. Foreign bank branches have high volatility in earnings because they rely heavily on tradings in FX and derivatives. We are also going to have a lot of volatility this year, so we need to manage this effectively. As well, there's concentration in certain loan and trading portfolio. And as for foreign bank branches, there are risks related to working from home trend. And of course, there are possible contagion effect from the parent bank. So our supervisory goal for foreign bank branches are as follows. First is to promote off-site monitoring of potential risk factors. Second, we would like to operate the on-site examination flexibly considering the COVID-19 crisis. And in terms of ROCA examination, we're going to target those banks that haven't been assessed for an overdue term. And what's important more than anything else is to make sure that banks comply with the laws. So we're going to guide each bank so that they can execute internal audit by themselves. And the last part of presentation is on working from home. In managing and controlling information when people work from home, there are risks related to malicious code and information infringement. And we have come up with information protection controls for remote access to address this issue, and I ask that you comply with this. This is all for my presentation for today. If you have any questions, please leave comments and we will address your concerns. Thank you.
네,
This closes the supervision direction for banking sector. From now on, let's have a Q&A session. During the presentation, we have gathered some questions posted on the broadcasting website. And let me go through these questions. First of all, there was a question that is the presentation material is provided after this broadcast? The answer is yes. First of all, the YouTube and Facebook channels will contain these video clips, and also the presentation materials will be provided afterwards. And the second question, is regarding the capital ratio of domestic banks. We have received a question regarding the capital ratio of domestic banks. Let us go back to the first version of our presentation. As you can see, these numbers, despite the pandemic situation, the ratio has increased, and as you can see, the net income has decreased a little, but that was due to the preparation for the introduction of Basel III requirements. And among the small and medium-sized enterprises, the amount of loan is increasing, but still the asset soundness and the asset quality is increasing. So you can see the soundness of domestic banks' assets. And the minimum capital ratio, according to the Basel III, stays at 8%. And there are buffering capital, and the systematically important banks needs to face the surcharges as well, which makes the number 11.5%. And there are varieties between the banks and the financial holding companies. However, we can still see that domestic banks' asset soundness is very stable. And let us make another question, because some might say that if this asset soundness is such a good shape, why the dividend is so limited? As I have mentioned before, the volatility last year persisted due to the pandemic situation, and the credit ratings among individuals aggravated the economic situation, and the normalization process can face a bigger risk or damage. So we conducted a stress test regarding these risk factors, and the result shows quite fine, but still the ratio such as 10.5 or 11.5 was required, but some banks showed worse results. This is why we lowered the.
Moving on to the next question. We are now looking at the comments. And there are no particular comments as of now. So we are going to wrap up the Q&A session for today. So for the last part, if the Banking Supervision Department have anything to say to the audience, please do so. Most of all, I'd like to thank all the audiences for watching today's event. And I hope that all the presentation that I delivered today was fruitful for you. And as the comment previously said, if you have any questions on our supervisory direction for this year, please address to us anytime. And we're going to reflect your concerns as much as possible. And I would like to make one more note for today. And this is for all the bankers. I believe that the overall situation has improved, but there still exists some volatility and instability. And due to expanded volatility due to possible U.S. interest rate hike, and due to the pressure stemming from those interest rate hike, we are seeing some expanded volatility. And one prime example is the Archegos incident. A hedge fund called Archegos has undergone a huge price volatility, and this led to a substantial loss of the investors. And thanks to the loss absorbing capacity of other banks, this incident has gone without much problem. But this can happen in any market and even in Korea. So I urge that we monitor our volatility in a tight manner. And from the perspective of a supervisory authority, I'd like to make some comments to foreign bank branches. And today we're joined by the team leader of the examination department, and we're going to listen from him. Good afternoon. This is Kim Chi-hoon from the examination department. I believe Director General Lee elaborated much on the examination direction for 2021. For foreign bank branches, they will also be subject to our examination. And however, depending on how the COVID-19 situation develops, we're going to reflect the situation so that we can conduct our examination smoothly. We're now choosing the subjects for our examination, but there hasn't been any specific banks that we are going to examine this year. However, once we do select all these examination subjects, we are going to notify to you. So please be reminded. Thank you.
감사드립니다.
Thank you for your comment and answers. If your comment or your opinion is not went through today during this broadcast, we'll listen to you every day. So please reach the Financial Hub Korea website, and you can find the inquiry emails. So if you have any say or any comments, please reach for us. This closes the supervision and Q&A session for banking sector. and the first session of 2021 FSS Speaks. Thank you.